Welcome to TradeTheMBI.com. This is John's report is for the 6th of December. And again, we've supported right off the same previous algo level. We were just waiting for new fund money to come in to begin the potential turnaround for a breakout. And so far, the bull run not changed at all. And we can see that just as short started to increase, they took that opportunity to use that to force a little push going back through, and nothing's changed from a DOC standpoint. Science still deep under red, getting a little softening, but doesn't matter because we've got the full reset of DOC steel and it's supported above that negative 13.5. So that continues the reset of short-term buyers, got plenty of resources there to continue to propel things and turn around here from MBI, also Magenta. So from that standpoint, everything we expected, solid support that withheld. The question was really the NASDAQ and whether it was going to come back, visit that 76%, which is what we expected, and to hold right off that. And sure enough, it did and came right back up off of it. So, and likewise, reading there from a DOC just let us know that ahead of time, we knew that, in weakness, there would be, the support taking place right there. And that's just a good way to gauge it. And important rejection right here as the MBI Magenta met shorts. Complete rejection is already starting on that setup right there into the bullish side. So not too much of a shock because when we look at it from a TLT Treasury standpoint, when rates got way out of control, huge negative to, market price simply because you can get just as high a yield without actually having any risk. But as it's inverted now, we're looking at a situation where we're below, where the current Fed is with their rates, and the expectation from the bond market, of course, is that the Fed will have to ease. And so they're like jumping the gun, like really jumping the gun. Powell and them have indicated that they're not going to change their stance, but the market's just not buying it from their standpoint, which is going to make it tougher to finance those, very large deficits, at least to the broader market, which just means the Fed's going to have to make up the difference, which they have been doing. It's a bullish move for the market, another way to look at it. And this was also the secondary one. Oil continues to drop. Now, the question about oil is how much of that is economic activity? And I think it starts to become a precursor that if demand is falling off that dramatically, there are some issues. And so the market may not be off from that standpoint. Now, it's still elevated. I mean, yes, you're looking at it from the huge run up right here, which is where we saw that rate inversion, and now it's moved down. This is definitely supportive of the economy, which bodes against what the market's projecting, because that would be enough to sustain economic activity. So when we look at it from a broad perspective, the market looking for huge negative growth situation, not necessarily going to play out. And this gets back to that whole constant, clamor about, the end of the world, blah, 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 and everyone talking about, recessions then. And I've just been saying, from what we've been seeing, that things are not great, but they're just going to continue to plug along, which generally from an inflation rate, the market has to go up to accommodate that inflation situation. And of course, you have the huge number of, top 7-8 stocks that represent over a quarter of the S&P readings in that, as well as a big chunk of NASDAQ. And they're the ones, that have done exceptionally well. But that leaves the broader market. If there's any improvement economically, well, the rest of the broader market, when it starts to rise, certainly going to elevate things. And even if you have a status quo amongst the big boys, you would still have an increasing market. And I think that there's still plenty of activity in the big names that hasn't changed at all. In fact, I may even start putting up some of those just so you can see where they're at, because, that is the general market mover. When you look at the euro from that situation, the oil easing certainly propelled the euro quite a bit, but the complete lack of any growth potential in the eurozone is just a nightmare. And this idea of constantly pushing it up to keep it into the safety zone because again, we know the terror that they start to feel when it gets down towards that 105, because at some point someone may realize the emperor has no clothes, and what do you want a euro for? But you look at then gold, interesting, performing just the opposite of what the cryptos are doing, because again, when you have the opportunity to adjust for the non-physical trade, you can manipulate it quite a bit. Now, it broke out to the new highs, and it quickly was sent back, well, not surprisingly from our viewpoint, with the positive extremes filling them back in. But the juxtaposition is you've seen Bitcoin taking off, the prep for ETF. ETH has been behind because obviously they still haven't gotten their clearance for the ETF. But we talked about this even when Bitcoin became an ETF setup, that it created a potential for driving the price of Bitcoin down, and it did that very effectively right as the futures came out for it. So is it pump and dump? Not necessarily, because again, I think there's still a lot of concern that people have about the viability of regular currencies, except for the fact that at any point governments can just say, can't trade this. And we see that the IRS has really ramped up its activity going after those with crypto assets, at least from a monitoring standpoint, and trying to go after. And you look at some of the relative new cases where they're talking about these new proposals for wealth taxes, and this idea that you can pretty much tax unrealized gains. And that's been the latest thing. And can you imagine, you do that within a crypto market where you haven't sold anything or done anything, and they still tax you for the appreciation. No justification on how they're going to handle losses, whether you'd be entitled to take those, but they're certainly going after the increases, and it's an impossible thing to gauge how that works out. But you can see the difference. Bitcoin solid rise here, ETH not quite meeting the situation. A variety of reasons from there. When we look at it from our 50K standpoint, so coming off of our decline, we had that move that was pretty much even, and we had the spike of the NBI white that caused a break below the 23%, but wasn't able to sustain that, and Magenta overtook it within the last dip below the 23%, and once that crossed over, that was the clear long signal from there. That was right around that 45.70 range, and propelling fairly decent from this particular point. Not a surprise. What I found interesting, though, is when I look at our 5K tick chart, we're getting as much activity in the post-market or European session of that than we are in the regular day session, which is interesting because it really allows for the big players to make quite a move even before the market opens. And so in that dip that came through, the market opens, goes up, and then just retraces it going back through. And then again, here we see the pump in the post-market setup going forward. So truly becoming more of a 24-hour action as bigger companies are able to utilize the fact that they're around all the time, and they can just shift from one area to the next. Not a surprise. I've always been capable of doing this. It's just we're seeing a bit more of that activity, and it just becomes great for stop runs and things. From that standpoint, when it comes to the daily open, you don't notice anything, because if they bring it back up, to where it was, or even better than the close, then they've, doesn't look like anything happened. But that's also where it becomes difficult when you're in ETFs and some of these things that don't open until you have an opportunity, and it makes it very easy for those to have their stops run either at the gap up or gap down. And it's just one of the facets of why we look at futures, just simply because we're able to follow it the entire time and what's actually taking place. So, but overall, still good, but we're also starting to see a little bit more of an increase in that volatility. And I think that's just going to continue to ramp up here as we start to move towards the middle of the month. And the end of year trade is going to be probably quite exciting because the differential between economic readings and market expectations starting to have a bit more of an impact. And then that's where you get that battle of rotations. And um, it'll be interesting how that's able to support. I mean, when you've had the NASDAQ really fade off as much as it is, the market hasn't moved much, so it's not been noticed, but there's definitely been some cyclical changes in allocations. So we'll definitely be monitoring, the usual, but also adding in some of that broader macro viewpoint. But at the end of the day, intraday readings of that still been pretty clear, and the overall bullish bias hasn't changed anything. We're just getting normal fillbacks, so nothing catastrophic in any way, shape, or form, despite some of the broader headlines that always go to extremes, from a bullish side as well as a downward side. And you just have to get past that noise and actually trade what is, and the readings are pretty clear. So we'll just continue to go with that. And when something changes, we'll let you know. As always, though, trade well. We'll talk again later. Look for me on Skype chat.